Hello and Happy New Year. My name is ella.goren and I'm a long-time real estate developer, investor, and broker. I've been building condos, investing, and running Airbnbs in Boston for past 10 years. My Sunrise Realty and Investment Agency specializes in a strong cash flow producing investment properties, mortgage-free home ownership, and financial independence, all through smart investment in real estate and amazing opportunities it has to offer. In my new Sunrise Real Estate series, I will be going through use case scenarios so you see how broad the opportunities are, regardless of your life path or situation at the moment. Financial independence is achievable goal, was done by many before, and anyone can do it. So let's look into three family building purchase with the equity line for down payment. Luckily, due to great appreciation in the past years, many of us have good equity in the houses, which could be used for the down payment for the purchasing of multifamily. So with down payment of 25% from equity line and outrageous nowadays mortgage interest of 7%, with the monthly furnished rentals 12,000, which I prefer over the regular rentals because they yield higher rent, obviously, and also they actually have more security in the payment by traveling professionals or other people who need temporary rentals. So the mortgage payment is going to be $4,500. Monthly expense include tax, insurance, utilities, repairs, and equity line payment will going to be $3,000. So our monthly income going to be $4,200. Our return of investment after 5 years term is $545,000. And I want to point that this is appreciation and the monthly income. And interesting that appreciation is growing on your purchase price of $900. That's why investment in real estate is so beautiful. Is that appreciation going on the whole price and not what you put down? So our yearly return on investment is 27%. Now let's look what's going to happen when our mortgage interest going to go back to 5%. Which going to happen in the near future. Our monthly income going to grow to $5,500, and our return on investment after 5 years going to be $636,000, which give us yearly return on investment is 30%. Now let's look if you do have this cash for down payment in your saving account. And you do put this 25% down as a cash. So with the current mortgage rate of 7%, your monthly income going to be $5,600, and your return on investment going to be $624,000 after 3 years. After 5 years, sorry. It's a very beautiful return on investment with the yearly return on investment of your $225,000 of your cash of 30%. And let's see what happens when it's becoming 5% interest. So your monthly income grows to $6,500, and your return on investment after 5 years is $692,000, and your yearly return on investment is 32%. Now let's say if you use FHA loan with 5% down payment, so you put only 45,000 down. So your monthly income is $4,400. Your return on investment after 5 years is $563,000, and your yearly return on your 45,000 of investment is 67%. So what is the ways, besides just waiting for 5 years patiently, what is the ways to grow your property value? You can rehab, you can add more units, you can rent by room to group of renters, you can utilize short-term rentals, my favorite, you can permit as a rooming house or bed and breakfast, you can add parking, many times it's pretty easy to do, or you can deem units as accessory structures whenever adding more units is not possible. This is the ordinance which added to many zoning of many towns these days. And I'm happy to tell you which ones. So what's the big opportunity now? You can negotiate the better price. You can utilize seller rate buy down, which will bring you to 5% now. You can buy outstanding property with a discounted rate. And when the next year rate going to be 5% and real estate inventory is low, home values will go up. You have to be smart and see the futures before it become obvious. You have to look beyond headlines. And if you see in the future, you will see lower rates and higher home prices. So let's quickly touch to a very famous acronym of BRRR strategy, which is popular between real estate investors. So that's the circle: you buy, you rehab, you rent, you increase your property value by rehabbing, or by waiting for 5 years, you refinance, you pull the equity, and you repeat the process. As a real estate investor, you should be able to do this process every 3, 4, 5 years, depending on the market. So this is, as you can see, is the quickest way to grow your wealth. So what is the ways to fund investment property? We already mentioned you could pull equity line or use your savings. You can buy as owner-occupant and rent other units. You can buy as a second residence. You can partner with other investors. So let's say you have down payment, but you don't have a good income for the purchase, but somebody else have a good income but doesn't have a down payment. This is what the partnership for, and this works wonderfully for many people. I actually started my investment as a 3 partners. We were 3 people. We continue. We're purchasing already 3rd building in last 7 years. So it works wonderfully. You can borrow from parents' retirement fund, which I actually did in the beginning. You can take private loan from friends and family, which I utilize too. And you can use self-direct IRA for the down payment. So thank you, and to be continued next week.